And hello again. We're watching out for more developments from the ongoing U.S.-China strategic and economic dialogue as it enters its second day later tonight. U.S. President Barack Obama says Washington and Beijing share mutual interests in an economic recovery and is urging China to encourage more domestic consumption to sustain global growth. U.S. Treasury Secretary Tim Geithner also repeating a pledge to get U.S. deficits under control, sending assurances to Beijing on its U.S. investments. Let's try to shed light on what can come out of these high-level talks with Darius Kowalczyk, Chief Investment Strategist of SJ Markets, joining us as always from Hong Kong. Great to see you again, and thanks for coming along. First of all, it's interesting that Tim Geithner is urging the Chinese to spend, given that China's per capita income only about 1/10 of the United States. How much are you going to achieve with that?
I don't think that much is going to happen in the near term. The Chinese consumer is actually increasing his and their spending by a huge percentage each year, much more than pretty much anybody else around the world. So there is not much that China can do more in the short term. But obviously the U.S. would want China to rely less on its trade surplus with America, and that's why Geithner is trying to urge Chinese to do even more to boost their consumption.
Based on the kind of comments that we're getting after day one, what do you sense has changed? What has changed as far as the dynamics are concerned between the two sides?
It's really fantastic and exciting to see how the dynamics has been dramatically altered by the recent crisis. Now it's Washington that is at the end of the lecturing pulpit, with the Chinese telling the U.S. to reduce their fiscal deficit, to increase their savings, and the U.S. basically saying, yes, we will do this, yes, we will do this. On the other hand, Americans are still talking about renminbi appreciation, but the Chinese came out and said that American pressure on that front is much smaller than it used to be. So it seems that those meetings right now only serve to showcase internationally how the balance of power is shifting rapidly away from the U.S. and towards China.
And you know, it's still a give-and-take relationship, and ultimately it needs to come down to how to change the growth model. Do you think they will get to that?
They will try to talk about it, because the current growth model, with the U.S. still spending their way out of recession and China increasing investments in U.S. treasuries, is unsustainable, because it's triggering the bubbles on the macro level in the global economy. But in the longer run, nothing major is going to change until China depegs renminbi from the US dollar. And this is something that will not happen, I think, for the next few years, because China continues to be dependent on exports to the US for their growth.
Okay, some great points you made there. We had that record auction, the U.S. debt auction this week as well. Darius Kowalczyk, thank you very much for your thoughts from SJ Markets.
Thanks for having me.
Thank you indeed.